All right, ladies and gentlemen, congratulations. Those of you who subscribe to Plan B Express Cash Flow Solution Club, our scanner, the scanner called PBX Sniper Course in combination with PBX PIPS level, which is called psychological level. And I need to actually brush us up, especially those of you subscriber of this scanner, because abuse of this scanner will not give you joy. But if you can settle down to obey the simple rule of this scanner, it will give you joy. So let's leave the scanner. Let's go to the rules that you need to abide by. I want to teach you something that probably you may not have been aware about and all of that, especially those of us who are using the scanner with our micro account. Now, let's quickly start from position sizing and trading with this scanner. Now, very first thing we need to know, check how much is your money. So maybe your money is $10. Now you know that it's 1,000 cent. All right. So risk 10%. 10% of $10 ordinarily is $1. You can engage. So you will engage with 1,000 cent. So 1,000 cent is $1. So you probably want to engage with 10%, which is $1. Because those of you who have small money, don't follow other people the way they do. Okay. So now, how do we go about this? We now say use 0.01 to 0.05 for your trade. And then it's the accumulation you are looking for. Ripple effect is what you are looking for. Okay. Now, maximum 3. Now, there's a time you may increase it, and I will tell you how and why it may happen. All right. So then let's go this way. If it's $20, 10%, so 10% of it would be how much? So 10% of 2,000, so would be 200. Is that so? Yeah, 200, which is $2. $2 of your $20. So I'm just doing this just to ration it. Now you can increase as occasion serve you, but be careful. Okay. Now $2. Now this $2 per trade. That's 200 cents. So this one, 10%, that is 10% is $5. Is that so? 10% is $5. That would be how much? That would be 500 cents. Okay, this one will be 10% of this is $20. All right, that is 2,000 cents. Yeah, $20. That's 2,000 cents. So let's just go that way. Now, so no problem. Let's go. So let's look at this. Let's take a signal. Now, let's look at example of this signal now. Let's look at example of this signal. Let's say when this signal came up, and I'm going to talk about quality of signals thereafter. When this signal came up, this signal that came up was actually not this, but was this. But so then let's work with this. Now I'm going to tell you about quality of a signal, but let's just take this now. Let's just take this. So that means the stop loss is going to be just above this. This is 200 pips. This is 200 pips. 200 pips, that's about, yes, 200 pips, that's about 200 pips. So let's say 200. Okay, let's say 200 and something pips. So this is 200 pips. So how do I now go? There's something I'm going to give you a website. I'll write this website for you. So this website is called Market Bull. So let me give you. So that once you take your trade, you're able to do your analysis very fast. Okay. So once you take your trade, okay, you are working on this, or you have it predetermined in your mind. So position sizing. So let's go with this. So when you go to this website, so 200, so let's work with somebody that are trading with $10. So that means your cent is 1,000. Your cent is 1,000. How much are we risking on 1,000? 10%. How much is the stop loss? 200 pips, right? So let's calculate. So the highest you can use is 0.05 for this trade. For this particular trade is 0.05 for this particular trade, okay? So if you can use 0.05, divide it into 0.01. That means you can do 5. So that means in this point, you can do 5 maximum 0.01, right? you can do maximum 5, 0.01. Now, if you're going to use 0.05, you can only do 1. Can you see now? You can only do 1 because of the stop loss. All right? Because of what? The stop loss. So now, once you do that, 0.01. Now, 0.05, just 1. So let's look at it. So if you do 100 pips, so 0.05. So we have said the first target. So if you do 1, so that means you are targeting 100 pips. So from here, so let's calculate from here. To this point, it's already how many pips? It's already 150 pips. Oh, yeah, it's already 150 pips because this is already 50 pips and then 100 pips. So that means to this point, so you can target just 100 pips, 150 pips, okay? Targeting your trade. Do you get it now? So if you do, this is one, if you do 250 pips, if you do 250 pips, with that 250 pips, you have done $1. Okay, you have done $2. Okay, no. 250 pips because you use 0.05. Okay, use 0.05. So 200 pips is $1. So 250 pips is $1 and some cent. So you have done that. So because your account is very small, you have to maximize your account. Now, if you're using 0.01 in 5 places, if that's what you choose, then that means you are looking at this profit taking because your account is small. So let's say profit taking at this. Yeah. So I think 0.01 is a waste of time. Yeah, I think it's a waste of time to an extent. It's a waste of time. So probably you may want to just use minimum of 0.05. So if you're using minimum of 0.05, what would determine number of entry for you? But I always tell people minimum you should enter is 2 position. 2 position. But with this lot size as your stop loss is too big. Now, if you check this again here, because let's say this is a quality signal. Your stop loss is here. This one too is too big, 280 pips. So that means you can't do more than 1 position. Do you get it now? Just to make sure that you are risking 1%. So 280 pips. So if you look at it, 280 pips. So that let this one, you say you should use 0.03. So you can only use 0.03. So that if you hit stop loss, you are losing $1. So you can use 0.04. Okay? So you can use 0.04. So maybe $1 and some fraction. So 0.04. But in this case, you're going to maximize your trade. So what do? You monitor your trade. So that means if you entered from here, so as the market is doing well, yeah, so look at it. To this point already, this is 100, 200, 300. So 300 should be enough for you because you do 0.03. Okay? So you can be collecting your pips in that order. Okay? Now, but if you have opportunity to do more than that, then you can split into 2. So understand that if you are doing with $10, so manage this risk, 0.05, maximum 2. Except and otherwise, when the signal have a very good range. So we can have a very close range of some signal that are so massively fantastic. Okay? So let's look at this type of signal now. Let's look at this signal. Look at this one. Now, but of course, most of you entered at a conservative level. So most of you enter at the confirmation. So I enter here, for instance. If you look at my stop loss now, this is 100 and something. So there's some that are going to be 120, 140, 105, stuff like that. Then you're going to maximize your trade. Do you get it? Now, so that's how you minimize, control the risk. All right. And so additionally, so now if you are trading with, let's say, $100, 10% is $10. We say use 0.05 to 0.1, maximum 10. Now, it's still relative. How is it relative? So let's say trade you want to take is 280 pips. So $100 should be 10,000. 10%, look at it, 0.35. So that means you can enter position of 0.05 in 7 places because this is 3 divided by 0.05. So you can enter the position in 7 places. Okay, so somebody with $100, meaning that $100 person can be entry market from 5 to 10 position on a regular basis with 0.05. Do you get it now? 0.05 on a regular basis, you can enter 0.05 because you're having $100. So you can enter 0.05 consistently. So let's look at $50. So let me not jump over $50. Now, but what will determine how many positions you'll be able to enter is the risk reward ratio. That's your lots, that's your, call it formula. That's going to be your stop loss. Now look at this market. I took this trade when we're live trading. Now look at this. Take this trade, and this is entry. Now some of you entered here. If you enter here, you have to calculate your risk reward. Now look at it. So your stop loss, look at it, 140. So if it's 140, now let's go back to this 140. So, and you are trading with $50, that's 5,000. 10%, 140. Can you see now? 140. All right, calculate. So 140 you can now use, because it's divided by 2, you can use this. That means $50, 0.05, you can enter 7 positions because of the lot size, the stop loss. Now, if you are going to do with 10,000, right, that's $100. Look at it, you can enter 0.7. So that means you can enter 0.1 in 7 places or 0.05 in 14 places. Oh, yes. In 14 places, Maybe this 14, you can enter like 7 at a go. Then when there's some discount, you add more position. How did discount happen? So look at it here. You have entered like 7 out of the whole thing. The market is moving. You have already placed your take profits, 100. So sometimes when the market is good, you can target 100, 200, stuff like that. It's very fast. Look at it. From this point now, this 100, this 200, 300, 400. So you can enter in that way. Now, the market continue, and you have, see. So now when there's a pullback to an extent, maybe some places, you add more position as it were, or you can just pa. Then once a little pullback, you add. But maybe out of that 14, you can enter 10 at a go. It's still the same position. It's still the same $10 you want to lose. Simple. Then when the market now moves, so imagine you enter 140 and all of that, you end up doing 520 pips. So, and some you have taken the profit. See, the market pull back. So you may not see this trade to take. Maybe because you are not watching too tightly. So you may take this trade. A pullback and massive. This is a very fantastic one. Maybe it's going to be 100 and something pips as your stop loss. Look at it. Now I entered here. And then look at the stop loss. It's going to be below here. That's 170 pips. Then you're going to see. This was massive. This is 1,000 pip. All right? So you have taken some profit as fast as possible and then allowed the other one to run. Do you understand? This is the massive thing. So just like this now, haven't taken this trade, a massive pullback. As it's returning down, you are taking more position. Now listen. Why I have to do this for everyone is not my responsibility. You need to know what is risk management in your trade. But I think it's important to help a lot of people who are not exposed to the market properly. Now, let's say you are trading with $200. So you are trading with $200. We say you can enter 0.1 to 0.2, maximum of 10. So now let's quickly look at it. Now, if you take the trade that is 140 pips as a stop loss, for instance, let's say you take this one. And then so for stop loss, risk reward. Now, if you're using phone, I'm going to open phone eventually to show you how you open this risk reward on phone, okay? So here, this is a trade. You enter here. Your stop loss is here. That's 170 pips. Makes sense, right? 170 pips, no problem. Now, if that's the case, quickly, let's do something. Now, 170 pips. Okay, so let's quickly go there. So, 170 pips. So, you are trading with $200. That's 20,000 cent, 20,000 cent, and then 170 pips. So let's say 172 pips. You can use 1.16. So let's divide 1 into 0.2. That's 5. Let's divide 1 into 0.1. That's 10. So 10 places, 11. So 11, so you can actually do even 12 straight away. 12, so it's still going to be within the neighborhood of $20. So 12 is what you are going to enter, right? So 12. So you can enter like 10 immediately, okay? And then the market is going on. Right now, the market, haven't delivered, so this is sort of 50 or 70 or 80, and now 180, 280, right? 380. And so, So look at it down here. You have taken the trade, You're pushing out. Now, don't be afraid. So, because you have taken 1 or 2, 3 profits, you still have about 3 position or 10 position that's open, and therefore the market together. So the market push back here. You have taken some profit, you hit more, but always check within the allowance of your market, of your fund that you're allocating. This is what called discipline in trading. So you must level up your discipline and help this. So the same thing of $500, okay, 10%, okay, 0.1 to 0.5 maximum. So the same thing. So just go here. Oh, I have known how much I'm going to be risking. So this is going to be how much? 50,000 50,000 cent, right? So 172 pips, that's 2.9. So 2.9 is what we're going to be using for gold. So 2.9 pips, standard lot. So that means you can even use 3 standard lots. So 3 standard lot divided by 0. 0.2, one standard is 5. That means you can enter 15 position, all right? Can enter 15 position on your 200. So 15 position, you are in 15 good position. So 15 good position of 0.2. Okay? But if you are going to 0.5, that means maximum you can do is 6. So if you are doing 0.1, oh my God. So each standard 10. That means you can enter 30. 30, guys. 30. Oh, yes, 30. Tap. That's amazing, right? Hookland, fantastically amazing. Now, let me quickly show you something that's very important. So pay attention to this. I'm sure somebody is enlightened about this risk-reward risk management position sizing. Very, very important. You have to learn it and then know how to do it continually. So it's your business, so just focus. Now, A+ call from PBS Sniper course. So A+ call, there are some calls that they are not A+, so understand them. So I'll quickly teach you guys this thing called Power of 3, swing point, type 2 CRT and Power 3, then PBS pips level. What do we mean by that? Now, every calls that come from your scanner, let it be that you have 3 candle formation. 3 candles formation, okay? 3 candle formations. So meaning there's first candle, second candle, third candle. So first candle is called accumulation, second candle is called manipulation, and third candle is called distribution. Some wait for the 3 candles to finish, but I don't wait for the third candle. But I will tell you why you may need to wait, an area where it's very, very necessary, okay? So 3 candle formations, right? That's called Power of 3 or a swing point. And a swing point indicates a potential reversal. And our scanner is working with price actions, liquidity concept, and all of that. That's what I trade. So price action, which has to do with candlestick patterns, market structure, and all of that. A liquidity concept, sweep of set side by side liquidity, swing high, low, and all of that. That's what I trade. Okay. So if that's the case, so you're not going to look at, oh, if this signal come out, what am I checking? I'm checking, does it have 3 candle formation? That's one. And if it's going to come a confluence, forming a confluence, how do we form a confluence? It appears in pips level. Oh, that's amazing. Then outside the Power of 3, you can have type 2 CRT or Power of 3. This type 2 is called change in state of delivery. Change in state of delivery. All right? So this is like smart money concept terminologies. Don't worry. You don't need to know what is it. So now I'm going to show you example of this. So these 3 are very important, but rules you must keep. Only quality calls is what you should take. Avoid long weak calls. When the week is too long, that is the candle tail is too long. Avoid it because your stop loss will be too bogus. Avoid news hour when you are scalping. Okay. Avoid new session open when London, New York session just opened, avoid scalping that time because they are going to manipulate the market. It means sweep of liquidity and all of that. Target 50 pips and above. So, but sometimes if the market is favorable, maybe you can target 100. But if you know what you are doing, target 50 pips and then avoid wider stop loss. So don't always go into that. Then stop loss should always be placed above or below PBX pips level. Now let's open the chart and I'll show you all of this thing I just mentioned. Now look at it. First, we said when the signal is given to you, take only quality calls. I love this thing. All the thing I explained happen here. Let me open the candle wide, everybody, so that you can see. Okay, good. So let's go. Here is it. Please look at this call. This is not as quality as ought to be. This is very quality more than this, even though it swept the liquidity eventually. Now, but look at what happened. The signal said, so the rule said, let your stop loss be above or below pips level. This is a pips level. Now, so this market is already above this, so you can't put stop loss here. You have to put stop loss here. Make sense? Fantastic. Now, secondly, this power of 3 is not as powerful as though, but the setting was good. Now, because those of you trade confirmation, is this. What happened? The signal actually came up here before it moved here, but it's not a problem. Now, when it come up, you have this candle. This is accumulation. The last candle moving up, then the candle before the last. So this is the 3 formation of the candle power of 3. Look at it. Quickly, pay attention, everybody. Are you paying attention at all? So face it. Now, take only quality call. So you have accumulation candle, manipulation candle, and distribution candle. Now, this is what it does. This accumulation candle continue was moving. Then the second candle moved, and as if the energy is there, all of a sudden it weakening. Now, this candle pattern is not too fantastic, like you have a tail that is Gravestone Doji and all of that, but that doesn't really mean that it's going to give you a powerful quality calls to an extent, right? So you have to understand, because at what point did it come out? So now this is formed around the PBX pips level. Make a lot of sense, right? But this is the point you must make. The point you must make is this, very simple. The point you must make is this. Oh, we have seen accumulation candle and we have seen manipulation candle. If we have seen this, then we have the distribution. So some people wait for all of this confirmation. Okay, so now what you are doing is you are taking your entry. Immediately the third candle closes, and of course, even when most time closes bearish. So your stop loss is going to be big because you are waiting for confirmation. That's why it's about 210 pips. Do you see that? Now, your take profit level 1, of course, is going to be 100 pips down here. Second take profit is going to be 200 pips. Now, look at what happened. The first take profit happened. You are going to be afraid here. The market start moving back. Oh my God. Hey, I validated my trade. No problem. You have told the market how much you are going to lose. You can enter this trade 10 times in a day. So you understand? Imagine you are risking $20. You enter 10 times in a day, you lose 2 or 3, or you partially some, and you win 8. So you are going to be in the neighborhood of $120 to $130 in a day if you are trading with $200. Oh yes, I mean it. So if that's the case, then it's very simple. You have taken this trade, it's coming. Now the trade now pushed up. It didn't stop you out. Don't stop the trade. Leave it, let it be. It came back again, form another. This is not a powerful one. This is still what was recognized. This is not a powerful one, all right? But however, so this is accumulation, this is manipulation, and this is not a powerful one. You know why it's not a powerful one? Most distributions should close below the manipulating candle. The manipulating candle should be higher if you are selling, should be higher than both the accumulation and the distribution. Does that make sense? Fantastic. So I'm sure somebody is learning, and please pay attention. Now, let me go to the second part, what we call type 2. Now, type 2 is literally just an engulfing candle, but the way it forms is different. Now, it's an engulfing candle, but the way it's formed is different. You know, this power of 3 form in one single candle, 2 candles, 3 candle pattern. I have this training full training episode on PBS Club. If you are a member of PBS Club, you should be able to take it. I think for anyone who subscribed, I'm going to discuss with some of your guys, leaders, who you register through to buy this scanner, so that I'll look at how I'll giving it some consideration to add it to the course, where you can have access to free course on that, all of these things. Now, so here, look at this. This, your trade is going to be long. The week, the stop loss is going to be long. Let me tell you why. This is a quality setup. This is a quality. So I told you this scanner is programmed around price action. So here, and liquidity concept. So here we have a quality setup. See this candle? This is candle, right? Oh, fantastic. Now, and another one, it actually formed with other candle patterns. So, but this is this candle, the bearish candle, it stopped here. Fantastic. Do you know where it stopped? At a nice support. This is a support on the PBS pips level. That's not a problem. This candle open and sweep. This is sweep of liquidity. Now, so power of three form like this: the first candle, accumulation; the second candle, manipulation; and the third candle, distribution. But when we have the two, change in state of delivery, the accumulation candle is formed, then the other candle do two in one. Two in one, like it manipulate and distribute at the same time. How does it do that? It's going to wick out and sweep nonsense out of this and now close above this. This is a powerful turning point. Hey, so your scanner has identified for you. Don't even do any. If you lose, lose. Okay, so understand it. If you're going to lose, just lose. But this is no waiting. Look at it. A similar example here, but this is more powerful. But this is a similar example. Look at it. Change in state of delivery, sweep the nonsense out of it. In fact, these two candles form that, almost that pattern, pen. Then this is, at the close of this candle is your entry. And I'm sure this game gave you a signal there. Now, so this is a very fantastic one, right? So fantastic. So here you have seen a very quality setup. Let's go. Good, good, good. Now, stop loss, remember the law. So this your stop loss is going to be too long, right? No problem. So this is 290 pips. Oh my goodness, that's too big. Okay, but nevertheless, 290 pips. But if you look at it, the delivery was what? Massive. This is a bounce. Pass. No even stopping, no stopping. Pass. It doesn't waste you time. So all you do is that if you lose the trade, you are not losing more than your money, because you are going to your setup. Right? Make sense? You are still going to your setup to check and do your position sizing. 290 pips, you go there, and then, so this is the advantage of micro account. You can't do this. Imagine you are going to take 290 pips on standard account. You blow your money. Come on, you're going to blow your money. You get it, right? It's going to blow your money. So, but this is because of the privilege of this. Okay, so now let's go quickly. So imagine this. So here you have, even if you are looking at 1:2 risk reward, it's already done here. Then you are taking your profit. This one, bah, this one, bah, this one, bah, this one, bah. Imagine you enter 14 position or 10 position, depending, or 5 position. So you now say, okay, I enter 5 position, one here, one here, one here, one here, one here. The last one, you are going to wait till the end of discussion. Now, waiting at the end of discussion, because that's another thing you must learn. You are holding the trade. So some people too can hold the trade. As the market is moving and he has not given a counter signal, so you are still holding. So imagine when he gave counter signal was here. Wow, that's crazy, guys. Counter signal at that point, that's crazy. So that means you are exiting the trade maybe one after the other when he gave this counter, this thing. So you can now hear, that's about 750 pips, guys. Oh, yes. 750 pips. You have collected your money. Does that make sense? Now, so this is the point that you must understand. Only quality setup. The first is the power of 3 that form in 3. Then the power of 3, our CROT, and that form in change in state of delivery, which has to do with engulfing candle. And that's the very powerful quality. But your sanity will be maintained when the profit on the table is taken when it gives to you. So you always collect, okay, thank you very much. 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 Do you understand? Now, this is a powerful, and I'm sure when you give this signal, it was a very powerful one. But when you wait for this, it may drag you a little. I enter from here. If you stop me out, no problem. Now, if I enter this trade, my stop loss is going to be above here. So imagine you are waiting for this. But if you wait for this most of the time, listen, people wait for this. If you check it, that trade normally, except exceptional cases, that the market trend is towards that direction. If not, normally, it is not going to go here. Now, that is one thing. So I'm going to tell you now about, so quickly, let me tell you about time synchronization in taking and walking. So time synchronization. So time synchronization. Synchro. Don't know. I hope we get it. I don't know what time. Time synchronization. Wait. PBX. Sniper. Call. Scanner. Okay. So M15. I hope you know that this scanner take trade in all the timing. So not so M15, M5, M3, and M1. Now let me quickly tell you something about this. M1 is just normally how you refine market to come down and be able to take trade at the faster level, just like how you see this. Now, but the rule is simple. The time synchronization is that any trade that you visualized on 15-minute time frame and the setup is fantastic, come back to 3 minutes. What do I say? Come back to what time? 3 minutes, guys. Come back to 3 minutes. Okay? So 3 minutes is your time to check the proper setup and all of that. So look at this now, for instance. Okay, but if you are the type that take just few trade in a day and all of that, of course, your 15 minutes is perfect for you because it's going to give you very nice trade. Can you see that? So I haven't taken this trade, but this is so long. Can you see that? See that? So look at the trade. That was around 7:30 a.m. in the morning. Massive today. Massive, right? That was massive. So maybe you are the type that take only one trade. So you want to be on 15 minutes. You don't have so much time. And another thing is that you can set alert for your timing since you take 15 minutes. So you can come to your email. So all you do is to go to alert. Okay, you go to alert and then you set so do this way, then click here and put it there and then let it be on 15-minute time frame. Okay, so come to message, name it, just give it a name. Okay, and then come to notification, put it up, your email, and all of that. Then create. Okay? So once you create that alert, now all you do is that alert is going to come to your email. Oh, yes. Alert is going to come to where? Your email. So look at it. If you go to my mail now, you must have seen some alerts that come today. Okay, look at it. Gold alert. Gold alert. Type out this. Okay, GU. This is okay. So GU, that's massive. Okay, so this is GU. Now, so look at GU. So let's click on this gold alert. Massive. Said was trigger buy signal. That's what time? 12:30 a.m. Oh my God. That to be the first buying. Then another signal. Okay, that same signal. Let's see. 9:15 a.m. 9:15 a.m. 9:15 a.m. Then 3 p.m. 3 p.m. Okay? 3 p.m. Maybe re-emphasize it. Can you see that? So it give you your signal. So you are fine. 12:40. All right, 12:40, 9:15, 3 p.m. Can you see that? Make a lot of sense, guys. You can just you cool yourself, 12:30, 9:15. Come on, guys. This is amazing, right? These are amazing. So now, so if you go back here, and you set on 15 minutes because my own is 5 minutes. So if I go to my 5 minutes, you're going to see the signal that was sent. Probably when it has been confirmed was when it was sent. 9:15. This is the signal that was sent. This one. This is the one that was sent. Okay. Another time was what time? 12:30. Was it 12:30? Okay, there was 12:30 a.m. I think this will be that one. Okay. Okay, I probably do not even check that other one. Maybe it was a sell signal. Okay, so now let's look at this one. 1:30. We saw 1:30. Okay. So this is it. We saw another 3 p.m. Okay, so that should just give you signal given to you. Now, this is the thing I'm trying to explain to you when I talk about time synchronization. Now, I've told you if you're on 15 minutes, just stay and then wait for quality setup to come to you. Now, look at this 5-minute time frame. Look at this signal. Massive drop. And then it told you that this massive drop had returned back to this range. But I'm not comfortable with this trade. And then, of course, the trade was okay, was massive. It bounced because it came to an area which you may not know. Now, so this is it. I will go to 3 minutes first if I will be able to see better setup. Now, on 3 minutes, is this similar? I will go to 1 minute. Are you thinking about time synchronization? I'll go to what? 1 minute. Now, going to 1 minute is better off, right? So look at it, a doji, and then after a doji, or this is it inverted hammer or something? Yeah, so this is supposed to come long here, but inverted, and then a bullish confirmation. So this is better off for me and you. Then you are taking the trade, long position, stop loss. At that time, your PBS level will be down here. Then you are taking the trade and navigate as much as you want to navigate. Does that make sense? This is the one that makes us to do 3,000 pips today. Now, there's something very quickly I will show you. Now, look at it. See how the market was going. Now, once you finish taking the trade on 1 minute, if people are trading pattern, they will have waited, like say, this is a inverse head and shoulder, left shoulder, right shoulder, and they will say neckline. So until this one come back here, that's when they will take this trade. But you're already rocking the city. Man, why people are waiting for this chart pattern kind of a thing, and then you already what? Rocking the city. So this person is going to take this trade here. At that point, you are celebrating 810 pips. Leave that thing. When you have the right to, you will do as you want to do. Okay? So now let me quickly go back to, so look at 1 hour time frame. I just told you that this scanner take every period signal. So it's not just you looking at because okay. So look at the 1 hour time frame. So do you see power of 3? Massive. Power of 3. Powerful. Does that make sense? It makes a lot of sense. So this is power of 3. So when this candle was formed, all right, when this candle was formed, and then this candle closes inside the range, so you travel back to 5 minutes probably, and you're going to see a proper entry at the end of the day. But I'm not going to those details now. So I want to disable. If you still go to 4 hours, you're going to find the same thing. So, but you can see that you are delaying yourself waiting for these 4 hours when Jungbu have matured. So let me show you some important stuff. So let me disable this. Now, this is for professionals. So those of you who are not professional, just say, Oga, the one you have shown me is enough. So the other one doesn't really matter, okay? This one doesn't really matter, but professional, this matters to you. Now, if you look at, okay, let's list our PBS level off it. If you look at this market, as at the other day, that was on the 29th of January, this your scanner already told you that sell. Just like this scanner already tell you buy. And this candle, this not really engulf as such, but to tell you that we are bouncing, or more bouncing. Now, but so let's look at what we call structure. Quickly, I want to just teach you quickly what is structure. Now, if you look at this, look at where on 4 hours, you can see this scanner is crazy. Get that? Oh my goodness. So even oh my goodness, oh my goodness, oh my goodness. You know this candle actually closes bearish, but after the close of this candle, already told you that it's for a buy. So imagine you at the close, you now come down to a lower time frame before this candle form. You are in money. Oh my God, you do not understand something. You are in excess money. That's the advantage of this scanner you have in your head. So let's quickly go. Now you come back. So this is 4-hour time frame, right? Let me step down to 15 minutes. Fantastic. So as I step down to 15 minutes, what do you see? Oh, somebody help me. This tool is crazy, guys. Can you see that? At the close of that candle, and he already said buy. What do you come and see here? Power of 3. Make sense for me and you? Absolutely. This is fantastic, right? Good. Now, on daily time frame 2, does it pick trade? What do you know? So on daily time frame here, he has not reformed, but on daily time frame, he told you to sell because power of 3 formed there. Look at the buy on daily time frame. Let's see. Look at the buy. The last buy that came up on daily time frame was since November last year. Jesus Christ. At what price? 2,572. This guy already told you to buy. God. Oh, somebody is not clapping for God. This is the best time to be alive, ladies and gentlemen. So look at this. In that same year, 31st of October, he told you to sell. And if you have sold where he asked you to sell, even if you wait for another confirmation, let's look at it. That is 179. That is 1,790 pips. Oh, yes. Don't stress yourself. Now, look at the buy. Of course, if you just on daily chart, and you can do this even with your micro account. Maybe you just create one micro account and say, I want to just enter gold like that. But this is a double top. If you go to 4 hours, we'll have asked you to probably sell and all of that. But look at, oh my God. Oh, somebody help me. Somebody help me. So you can imagine this. Look at this. Say sell or buy. Of course, stop loss below it is going to be bogus, just 420 pips. And to make 1,530 pips. Okay. Did you hear that? So this actually works for everything. This is not only about gold. I just have to extend this thing for you. Look at Bitcoin. I've told a lot of people to buy Bitcoin, so they were not listening anyway. Now, look at Bitcoin. Oh, God. Ooh, somebody help me. So look at Bitcoin where they ask you to sell. They ask you to sell Bitcoin. Now, the close of that candle was bullish, but it's telling you to sell. Now, telling you to sell at that point for Bitcoin, what happened here? If you sell from here, your stop loss is here. You are just watching on daily time frame. That's 2,900 and something point. If it's a future, 3%. And then you are still rolling. So all the rolls that Bitcoin did, ladies and gentlemen, all right, you are beautifully, bountifully, fantastically fine. Okay? So now let's say you wait for the bearish candle when he asks you to sell. So that means you are going to be here. Now, I'm not going to talk too much about what you need to do back to the lower time frame, perhaps. Then, but you wait for the following day, for instance, to say, are we still good? I have told people about Bitcoin here, and then you see what has happened. It's still moving. It's going to 78 soon, and all of that. So look at this. That is 18,000 points from that. Oh, shit. Oh, there are secrets I'm unveiling to you. Even in your crypto, in everything, this thing do magic for you. Is somebody learning? You are learning. Fantastic. So let's go back to our precious gold. Now, there's something I want to show to us. So now listen, look at it here. So that means for this guy, after the whole thing, this is power of 3, this close bearish, and it tell you sell, ladies and gentlemen, sell, okay? Now, you, when you come, so there are things you do to actually sell and catch this, but I'm not going to go to that detail. Now, but look at the sell. Now, so let's close it. So now what do you do? You want to look at the structure. The structure of the market is, we're still bullish, right? Though the market have told us to sell. Now, so what we do is to identify structure. Now, we'll look at the structure. Then let's go to 4 hours. I wouldn't want to waste too much time, right? Going to 4 hours, that means by 4 hours, we're already bearish. Why do I say that? I say that because, look at this, is a break of structure. And there's a tiny immediate break of structure here. That means we're already bearish. So this is a immediate break of structure ordinarily. So with that, wherever you have a break of structure, there is what we call an origin that the market should return back to and probably go forward. And that's exactly what was happening here. Okay. Then we have the decimal thing here, similar thing over here. That's exactly what we're looking for here. That's point of origin. The origin where the market could come back to and dance. And it did happen. This happened. Look at it. This happened. And you're happy. Ooh, this is market, this massive and all of that. So where do we go? You have another break of structure. So I'm not going to detail. So that you have an idea of what is this market, bullish or bearish. Make sense? Now, so go to 1 hour time frame. So if you go to 1 hour time frame, as at the time I ask us to sell, can you see this 1 hour time frame? That means you will have been selling and enjoying yourself in this market. Look at it. This bounce, it came down here and bounced, massive. But there's something you probably wouldn't understand. The structure had actually picked this guy and break below. Now breaking below and again break below this. So it break below 2 places. So whichever way it has broken below, so this is market structure shift. It has shifted. So all you need, this rally, the rally up here, it just coincide with this, is to go and meet up to this guy. So if you meet up to this guy, if I take my Fibonacci retracement, I'm teaching you technical analysis right now, but I just want you to maximize your tool. If not, there's no need for this. Now, this is an PDRA, so this is coming to premium, and the market return back to the premium. Now you will enjoy the trade. And now continue to break structure, continue to break structure, continue to break structure. You see that? On 1 hour. So you're going to bounce back to 15 minutes quickly so that I'll wrap up this training. Now, I told you that this is for professional, okay? So if that happens, what do we have here? Now, this is the structure that broke, and now this is the external move of the market. And so that means what we have here is simple, that we have a new break of structure. Do you get it? So that is a new break of structure. So we have a structure broke down, and then we have a return back to the origin, and then it's aligned. That means you are still selling. That means this sell you see, look, oh my goodness. So when you come to 15 minutes and market is already bearish, you probably may be looking for more selling. Look at the bounce, look at the sell. So don't even stress here. No stress here, ladies and gentlemen, no stress here. The market, what do you see? Power of 3. Even if you are the type that do confirmation, okay, these are liquidity, this power of 3, it came up. So, we told you you are staying to wait for confirmation. So some wait for confirmation, and let's look at the confirmation as it were. So short, and then you're waiting for this confirmation. Your stop loss above the swing point. Okay, that's going to be 500. So, but if you know what you were doing, you are going to refine. Now, that means your target is going to be this guy, this structure down here. So that means, come on, 3,350 pips, ladies and gentlemen. Come on, that's crazy. Oh, yeah. So now, this is a break of structure. Powerful. Then this break of structure. So you have this, you want the market to return back, but this is a breakaway. But what did it do? It came, there's a little fair value gap, if I'm not mistaken. But what do you see? Another part of 3 here, massive. Then the signal must have given you, and then you're selling down. Make sense? Good. Now here, we have another break of structure. Fantastic, right? Look at it here. Okay, so this is another break of structure. You want the market return back up again, and then it return back to probably take into this overlap. Okay, and then the market return back. Now, you didn't have powerful power of 3 here, but you didn't even have powerful power of 3 either by change in state of delivery or whatever. You do not have. So this is it. So the market again continue. So where we have here, another break of structure. So this is where it's getting more interesting. Now, it's getting more interesting because this is a break of structure. So that means what you should have here is very simple. Look at it. This is what we call an order block. All right. So another block. So the market, this is the last low. Now, many will not take this trade because they are waiting for the market to return back here and reject at this and sell. It's normal. That's analyst for you. They have to wait for that. But you that have a scanner already gave you this. Come on now. You're already swimming in your money. And then, so this point is here. Now, when you want the market to return, it creates a liquidity and actually sold down and bounce up again. Then this is a sweep. This sweep gave consonance to something very important here. Now, it gave consonance to something here. You will see that? A fair value gap. So inside that fair value gap, can you see that fair value gap? That's the past, that's a massive one. Then a power of 3 was formed, and your signal was given to you on 15 minutes, ladies and gentlemen. And then that blow up, sold down massively, and selling down massively for this market. That's a crazy one. Do you understand? Sweep liquidity here and sold down massively. Now, selling down massively here was a return back again and still retest back to take this other block. Okay, so that means you have something internal structure. So imagine you waiting for this long, but somebody is already overfed with this. Makes sense. So here, it's like a market structure shift. The market return back up here, tap into this other block, and another massive sell. So that means you have a break of structure. This is internal now. Remember, there's an external structure there. Except and if this is taken out, the market is tentatively want to be bullish because it has taken out this high. So now we have internal structure now. Then market came down, broke this structure. So if you break this structure, you are looking at another point of interest here, which is this other block. Now, the market is creating some kind of level of liquidity on our inducement. So we need to travel back to this point. Traveling back to this point and reject, that means we reject both inside our order block and breaker block. So once we reject here, that means the sell is going to be massive. And then you have this. So when you break this and then coming down here. But in all this, you are making money because you have a tool. But when you have an idea of what is actually playing out by structure, you'll be in charge more than other persons. Does that make sense? Very powerful. So let's go. You can see the market right now. So it has broken the structure on like 5-minute time frame. You can see this, you can see that. Okay, so if you take it down to this point, you can say, okay, this is the market structure shift on 5 minutes and came back to the other block and actually whipping into this point. So here you have another break of structure on 5 minutes, and then this is a return, and then you can see this other point or probably this other block. So this other block was mitigated. So that means this market will still sell down. Can you see that? It's selling down now. So now coming down to 3 minutes. So you're going to see your market. Can you see your 3 minutes? Your market already told you to sell. Can you see that? 3 minutes. Now this market sold here. This is a powerful one too, because, but I don't wait for this. I take this, my stop loss above here, then look at another powerful one, right? And then the sell continue. So you have this low here that you'll be targeting for the sell as it were. Does that make a lot of sense to you? This is how powerful this thing can be. So now let's enable our PBXR level. So now, adjusting it now will give you an edge to be taking your profits level by level, level by level. Ladies and gentlemen, can you see now? Level by level, continue, level by level, and all of this. This is the magic behind your scanner. Then if you go to 1 minute, probably to give you a faster entry. So 1 minute and your 3 minutes are the magic maker. 1 minute and your 3 minutes are your magic number. M3, M1, M3, M1, M3, M1. And but once you have taken a trade and it's running in your favor, step back to 5 minutes and 15 minutes so that you don't lose guard, just a little shake. Exactly want to hold a trade for a little while, that's what to do. Exactly what to do. Exactly what to do. So many persons didn't know where this market again travel back from this point. Look at this, power of 3, accumulation, manipulation, distribution. But this is not a lively one. So accumulation, manipulation, this is not a lively one. But yet, you got a signal there and you bought up. He has swept this liquidity. So imagine for somebody who's waiting for pure structure. He's going to wait for a very long time and nothing will happen to him. He may not see anything to pick. Okay, so please, this will be enough for you to work on. And I promised Dean of Forest, that's the head of FJET, the administrator of FJET Academy, and so many other persons, Prince in Enugu and all of that, told them, I'm going to stage training, retraining on how to actually maximize this scanner as much as possible. All right, thank you very much. My name is Flix. I'm the team leader of Plan B Express. So you want to subscribe, get back to your leaders in respective places. And of course, you can chat up with me, and then I'm going to put you through on how to subscribe to this scanner. Does that make sense? Thank you very much. Do have a nice time. Bye for now.